Did you know that the GST you pay while you purchase something for the business as a registered dealer, it will not be an additional cost, because that whatever the GST you paid at the time of purchase as a registered dealer, you can use it as a credit and you can adjust against the sales GST. So the net amount only you have to pay as GST. So this technique is called the input tax credit in GST, and this is an important concept. Let me make it clear with the help of an example. Say for example, Mr. R is a dealer, registered dealer. He purchased goods worth 50,000 from a supplier, and supplier charged rupees 9,000 as GST. So Mr. R is paying 50,000 plus 9,000, 59,000 as the amount for purchases. Now imagine he is selling this item and he is collecting 15,000 from the customers. So his input tax is 9,000 and the output tax is 15,000. So the net effect, he can 9,000 he has paid, he can use it against the sales GST when he has to pay to the government, provided the conditions are fulfilled. That means 15,000 minus 9,000, the net GST 6,000 only he has to pay to the government. This will avoid cascading effect of tax on tax. Before GST was introduced, every item tax is added, on that amount again tax is added. So tax on tax or the cascading effect of tax is removed by introducing GST in our country. So this is an important term or important thing you have to remember or you have to learn in GST, input tax credit. Now what are the conditions for claiming input tax credit? He should be a registered dealer. He has to buy goods and services. He has to pay that amount to the government, and he has to declare that in his GST returns, GSTR 3B. Then he has to show the correct documents, debit note or whatever the documents required for that, claiming that should be available with the registered dealer. Then only he can claim the input tax credit. Now what is the definition of input tax credit? Input tax credit is defined under section 2 subsection 63 of the CGST Act. Definition is very simple. Input tax credit meaning credit of input tax. So in our example, R purchased goods worth 50,000, 9,000 the supplier charged as GST. So 9,000 is the input tax. The credit of 9,000 is the input tax credit which he has adjusted with the sales where he collected 15,000. Then the net GST 15,000 minus 9,000, 6,000 only he is paying. So that is the impact of ITC. Now some blocked credits are there, that is personal expenses, food and beverages, some travel and concessions, club memberships. In these items, if you have paid GST, you cannot claim GST. So GST, the conditions have to be fulfilled like registered dealer, disclosing in the returns, all this. Then only they can claim the input tax credit. Now what is the time limit for claiming input tax credit? You cannot indefinitely postpone claiming input tax credit. Section 16 of the CGST Act 2017 is specifying the conditions based on amendments for claiming ITC. Within that time you have to claim, otherwise you will not be eligible to claim the ITC. So you should understand this important concept of GST, that is input tax credit.